Well, if you want to start a lively debate among stock traders and investors, just pose the question, what works better, fundamental analysis or using the charts? In this video, I'm going to explain what I have learned from 35 years of trading the stock market and where I think each has its place. You probably have a strong opinion on this already, but I may try to change that as we go through this video. We'll talk about the hazards of each method and why one method is really better for most people. I'll show you a simple way to beat the stock market as we go through this. So let's dive right in and talk about stock charts or smarts. What works best? So when I think about using fundamental analysis, I think there's a couple of things we have to recognize. First is that it requires a good deal of expertise. And when you're looking at the market activity, if you really know how to do it properly, what you're really looking at is what is the opinion of millions of investors and traders. Now, you could look at the fundamentals of a company, but your opinion is just that of one person. Whereas when you look at the trading activity in a stock, which is really looking at the chart, you're looking at the opinion of millions of investors and traders. Now, just pose it this way. Would you beat 100 people in a game of trivia? Well, unless you're, one of these Jeopardy champions, probably not. 100 people are more likely to know the right answer to a trivia question than just one person. And it's kind of the same way in the stock market. If you're trying to figure out if a company is more likely to go higher than lower by looking at the company fundamentals, then you really are just one person. Now, if you are a real expert in a particular industry, maybe you're an expert in oil and gas, you probably have an advantage over the general public because you know more about that sector than most. And in that instance, you may be able to do good fundamental analysis to predict where those stocks are likely to go. With that said, I have met people who are very knowledgeable in a sector like oil and gas, who in fact maybe lead one of these companies in the industry, but because they're so close to the business, sometimes they can have a bias that sort of clouds their judgment. And so there's a danger to knowing too much and being too close because it's easy to fall in love. Now, I think what tends to happen is that in the long term, fundamental analysis will always win. If you are buying good companies, well run, good management, good earnings, growth, all of those things, in the long run, you are going to be fine owning those companies. And if you can pick the very best of the best companies, companies like Nvidia and Apple and Tesla, which over the last 10 years have done great, well, that is going to give you some really great long-term returns. But it's very difficult to pick those kinds of companies early because it takes a lot of expertise. Now, think about it this way. There are millions of people investing in the stock market, and they are casting their vote with money every day. Every time you buy a stock, you're essentially casting your vote that you think the stock is worth more. And on the other side of that transaction is someone who's selling to you who thinks that the stock is worth less. Well, if the group that's correct is winning, if the buyers are the ones who are right about the future direction of the stock, you're going to see the stock start to go up. Now, that could be driven by good fundamentals, but what really drives the price action are the opinions of the people buying and selling the stock. And so what I prefer to do, since I'm not an expert on any one industry, is I let market activity tell me what to do. When you look at a stock chart in the right context, you're really looking at what every dollar traded on a stock believes. I don't consider myself to be a better expert than the millions of investors and traders in the market. Now, keep in mind, I'm just a retail trader. I'm not managing $10 billion. When you have a lot of money to manage, you have to do fundamental analysis because you cannot trade in and out of stocks the way a person trading from home could. If you are an individual investor like myself, we have an advantage. We are much more nimble. To move $1 million around in and out is obviously much easier than trying to move $10 billion. And so you can be much more short-term oriented and trade trends and things like that. And I'll show you how we can do that in just a moment. In the long term, as I said, I think fundamentals really matter. But in the short term, Price movement is typically based more on supply and demand, human psychology, and short-term sentiment. See, the stock market isn't fair. Some investors get better information before the general public. And we can trust what market activity tells us because we are really following what the well-informed are doing. So let's take a look at one of the best performing stocks in the market over the last couple of years. That's NVIDIA. Now, I don't know a whole lot about NVIDIA. I'm certainly no expert on the company, but I can tell you that when there are abnormal price breaks from low volatility, it's a signal to buy. So what do I mean by that? Well, first of all, let's talk about low volatility. When a stock is in a sideways trading range, like here, that is low volatility. NVIDIA was going sideways between $40 and $50 through the middle of 2023 into 2024, and it did it for 6 or 7 months. And then right here, we had an abnormal price break through resistance. Now, what causes that? Well, the people that know the most about NVIDIA, and typically they're also the people that have the most capital under management, they do this great research. They have the resources, the expertise to figure out what the fundamentals are really worth. I don't think I have that. You probably don't either, but we can follow the people that do. When a stock is trading with low volatility, sideways trading, and then all of a sudden it breaks through a ceiling price that it hasn't seen before, and it does so typically with more volume than normal, what you're really seeing is the people who do the really good fundamental analysis that have a lot of capital at their disposal, they are buying aggressively and they are telling us what they are doing. They've done the work. They've done the great fundamental analysis. We don't have to. We just follow what they're doing. So going back to this chart, you can see there's a break from sideways trading with abnormal price action and abnormal volume. And that started the big run in NVIDIA from $55 all the way up to $130. Now, we had other breaks like that. If we were to go back on this chart farther, we would see those as well. And we can see this kind of thing on any stock chart. If we pulled up Tesla, let's look at Tesla, and we'll go back for a little while here. Let's go back a whole year, and let's look for low volatility and an abnormal price break. Low volatility and an abnormal price break. Now let's examine this chart pattern right here. We see a ceiling price on Tesla at around $260, $270 a share. We also see that the bottoms are rising on the chart. That means there's optimism. So the investors who are doing the fundamental analysis, that are moving the largest amount of capital around, they are defending the stock anytime there's weakness. The stock goes up, it pulls back, it makes a bottom. It goes up, it pulls back, and this time the bottom isn't as low as the previous one. That tells us that the buyers are optimistic. In general, the market is optimistic. But we also have this ceiling price here at $270 a share. What the market is saying with that ceiling price is that buyers and sellers don't think that this stock's fundamentals are worth more than $270 a share until right here when we break out through that ceiling with abnormal volume. And the stock then went on a run from $290 all the way up to $480. Now again, as smaller retail investors with, let's say, less than $100 million, but most of us, of course, would have less than $1 million to invest in the market, we can be very nimble. We can buy 1,000 shares there and sell there and make $160 a share. We could do that with 10 shares, with 10,000 shares. We can move in and out of this very easily. If you had $10 billion to trade, you can't move in and out so easily as a retail investor can. And that's where we really have an advantage. So when we talk about who is doing the best in the market, we have to realize that the long-term investors have to trade on fundamentals. But in the short term, you can take advantage of price movement based on supply and demand of the stock, human psychology, and just the short-term mood of the market. Again, the stock market isn't fair. Some investors get better information before the general public. And if you want to do well in the market, the best course of action for you is to use chart analysis as a reference for what good fundamental analysis is. You don't have to do the work. You just have to follow the people that are doing that work for you. I don't know anything about any of these companies that I buy and sell, but I know that the people who know the most are the ones painting the stock chart for me. And it doesn't have to be complex. You don't have to use complex indicators. Just draw lines on a chart. If the bottoms are rising, we have optimism. If the stock's going sideways, we have low volatility. When a stock breaks through resistance from low volatility, from optimism, there's a very good chance it's going to go higher. What causes that breakout? It's the people doing the good fundamental analysis. What are we doing? We're just one step behind them, following their abnormal trading activity. I hope you've enjoyed this video. I just want to quickly remind you that my website, stockscores.com, has a free weekly newsletter. If you go to the homepage and go to see more, you can become a member here. It's all free, and you will get my weekly email, which gives you stock tips and trading ideas and lessons, and it's all for free. I don't send out a lot of spam. You can see right there. I hate spam as much as anyone. So I hope that you'll register for that as well. I want to thank you for enjoying this video. If so, click on the like button. Make sure you're subscribed to the Stockscores YouTube channel. And as always, trade well.